Hi, I'm Pauline Harrison, and we are here at Money 2020 in Las Vegas. Would you like to introduce yourself for us, please?
I'm Amit Sharma. I'm the CEO and founder of FinClusive. You can see from our name, financial inclusion is our true north, and we take a unique approach. We're a regulatory compliance company that provides a full stack of anti-money laundering, know your customer, digital identity solutions built for traditional finance, as well as digital asset and crypto and non-traditional financial services companies.
Amazing. And how are you finding the event so far?
Oh, it's awesome. I mean, the one big takeaway is it's a one-stop shop of engagement. So
Right.
investors to partners to customers to potential folks that can work with us.
Yeah, absolutely. I mean, let's just get right into it. Why is it important for financial companies to find compliance as more than just a box ticking exercise?
Compliance has had a long road of kind of a poor reputation of just being, let me tick the box because regulators are asking. All anti-money laundering and regulatory compliance comes down to one central question. Do you know your customer? Period. Which is the central question you want to ask if you're a payments company, if you're a lending company, a mortgage company, an insurance company. If you're providing a financial services or product, you want to know your customer.
Right.
That's truly what compliance is. Now, at the end of the day, another number of things from identity verification and validation and monitoring and transaction tracking all go into that financial crimes compliance toolkit. But when done well, it's a fantastic and essential business intelligence tool. So instead of looking at it as just box ticking, it's really about managing risk and understanding your client base.
So what are some of the misconceptions when we think about compliance then?
Well, so one, that there's a whole laundry list of things you need to do just to meet a regulatory set of questions, right? That's one. Second, especially in the non-traditional financial services space, virtual asset service companies, crypto companies, peer-to-peer, blockchain-enabled, decentralized financial services companies, many have this conception that compliance is really, can I verify who you are and make sure you're not on some terrorist watch list? But actually, there's a lot more. How do you monitor that client? How do you risk score that client? How do you understand their activities, be they transactional activities, engagement activities, affiliations? So there's a lot more that goes into what, again, I continue to see as risk management and business intelligence. And so when you put those whole things together, when I onboard a client, how do I understand them, risk score them, engage with them, monitor them over time, and then, of course, there's regulatory reporting associated. So those are some of the misconceptions. But so it's a lot bigger than folks think,
Right.
but it really is a risk management exercise.
Absolutely. I mean, and let's think about decentralized finance now. Why is it so important to have a digital ID system when we think about decentralized finance and the system it follows?
If you think about the initial question of kind of what is compliance, it's knowing your customer. Identity is central. Now you can go to one boundary condition. There's over 1 billion people on the planet that are just not born with a official ID. How do they access anything from education, healthcare to financial services? Because an identity is essential. When you have an identification and you are needing to prove that identity, how do you ensure that you're not subject to identity fraud, right? How do I ensure the utility of know your customer verification? It all comes down to identity. So what we've done at FinClusive is backed an identity credential with your KYC, your know your customer data. And that allows organizations in a decentralized space or a network of organizations to do three things. One, verify and validate the authenticity of them with that digital identifier. Two, enable those users, clients, to hold and provide protections to their personal identity information because it's very sacred. And thirdly, create a utility in the system so that it's not redundant, inefficient, and expensive to verify and validate identities. So it's very central to this process.
And so FinClusive recently joined the Crypto Market Integrity Coalition. A lot of words in one go. I'd love to hear a little bit more about this and what specifically that FinClusive is advocating for when we think about this.
So the coalition, the CMIC is, or CIMIC as some people call it, there's too many acronyms in this space, is really an attempt by the sector to understand and take a proactive sector-led approach to governance, right? Market integrity, whether you're in trading, asset issuance and the like, in the same way that you're in payments, financial system integrity is hugely important. And the CIMIC was stood up by private sector organizations to say, let's bring a layer of governance and education to the sector to understand how to protect consumers, how to ensure that there's financial system integrity, meaning security of access, and how to ensure transparency. So what we do at FinClusive is talk about what are the global policies around financial crimes compliance? How do you ensure that players in the crypto space, whether you're an asset issuer, payments company, or a trading company, an exchange, whatever it might be, how do you ensure that you put the proper policies and procedures and technology to ensure that you have safety, security, and financial system integrity? So hats off to CIMIC, and anything we can do to advance the regulatory and risk management pieces, that's what we try to do.
Yeah, absolutely. I guess thinking about crypto as well, how is it that digital assets can help with financial inclusion? I feel like that's quite an interesting space to be in right now.
Well, the digitization, the tokenization of economic value has been with us for a while, right? Every time you swipe a credit card, let's effectively tokenize finance. Now, the cryptographic representation is what's pretty incredible, and the ideas, innovations that are being created with blockchain technology, with these so-called Web3 or native applications to the web are hugely exciting because they're inherently peer-to-peer. And what was the purview of regulated traditional deposit institutions and payments companies 10, 20, 30 years ago, you now have small companies everywhere in the world building a native web-based application. That's where digital assets have tremendous value and potential. Secondly, you have mobile phone and smartphone penetration rates in some of the most remote places on the planet today that you didn't have 5, 10, 15 years ago. You can effectively put a financial service or product in the pocket of every one of those individuals. So digital assets show a lot of promise. Let me be fair though, has the crypto or fintech community really solved or cracked that nut in financial inclusion? Not remotely, not yet. I'm still very glass half full on it. I believe that with some of these financial crimes compliance and risk management toolkits, digital identity toolkits, we can enable a much greater exposure to and penetration of financial services and products to the last mile. Small businesses, crowdfunding, international remittances. International remittances are 3 to 4 times foreign aid today just out of the US. That is a massive space for financial inclusion, and digital assets represent a tremendous opportunity to drive that.
Fantastic. And I guess my final question to you is, where is this going? What's next? What's the future? In the next 5 years, are we going to see that breaking through, do you think?
I believe so. I truly believe so. 2 or 3 trends that I see on the horizon. The horses have left the barn, if you will, in terms of crypto and native web-based applications. That you can see just here at Money20, the number of companies that are innovating in this space, creating creative ways for organizations and individuals to just transfer value, issue value, and store value digitally. That's exciting. That will continue. Traditional financial institutions, that's the second trend. Traditional financial institutions from bulge bracket banks are increasingly getting into the space because they need to. They need to understand and embrace the technology and the innovation, but they need to do so in ways that now completely change the technological and operating infrastructure of how they've operated in the past. Thirdly, regulators are taking note, and the sector is coming in with proactive solutions. I think those 3 trends are very positive in terms of growth in this space. So I'm very forward-leaning on the financial inclusion opportunities. I'm very forward-leaning on providing a governance layer for risk and compliance management that will comport to this new technological revolution. And number 3, I think that incumbent players are playing the game more. Those 3 trends, I think, point to growth in the sector.
Amazing. Well, it's been fantastic to chat with you today. Thank you so much for joining us.
I really appreciate you having me. Thank you.